This is Michael Warner, and you are listening to Escambia Empires. Ladies and gentlemen, welcome back to the show. As always, I am joined by my brother and co-host, Danny. Danny, how you doing?
Doing good as always. How
Awesome.
you doing?
Man, you're looking beautiful as always.
Oh, thank you. Yeah. It's a freshly waxed head before I came in.
Yeah. Oh, man. Not even sure where to go from that, to be honest. No, James is really a good guy. I really enjoyed having him on the show. He's sharp. He's a young professional just like us. And I met him a couple weeks ago at a Pensacola Young Professionals networking event. And felt like, man, let's get this guy on the show. He's driven, and you can just tell he enjoys what he does, and he cares a lot about it.
That's right.
And he knows a lot about it too.
Yeah, exactly.
So that's one reason we decided to get him on, is because there's a few tax proposals for 2021 in our new current administration that he informed me of when I met and talked with him. And I felt like it would be something that's helpful for the listeners of the show, just to be informed and to know kind of what's going on. Obviously, he disclaimed several times during the episode that it's not financial advice, and also these are just proposals. Nothing is set in stone yet, but there's a few different things. We talk about 1031 tax exchanges specifically for those involved in real estate, so look out for that. And then we learn a little bit about James and just his history and things like that. So it was a good episode. Glad we had him on, and he's just started with Northwestern Mutual, and I don't know. I never would have thought that. He's just really, it seems like he's put a lot of time and a lot of research in, and hope he does really well.
Definitely. Yeah. Great guest to have on the show. And the 1031 exchange definitely doesn't just apply to people involved in real estate, but people that have access or inherit or are incorporated in real estate at all, whether it's by purpose or by on purpose or whatever. So anyway, just pay attention to it. And it's applicable to not just entrepreneurs and real estate professionals, but anybody that's exposed to it.
Yeah, we tried to keep it super high level as well, so it's not too in depth. Talking about taxes can get really, really boring. So if this isn't the episode for you, that's fine. Go listen to another one. But otherwise, we'll jump into it. Here is our interview with James Kraft. James, welcome to the podcast, man.
Mikey, thanks for having me, man.
We're excited to have you on. One thing I say all the time is I love the podcast for networking. It just really kind of puts us in so many interesting places and looking for guests and things like that. And we went to a PYP meeting just a few weeks ago now, and talked to you a little bit while you were there, but you hooked up with Ethan Himka and Harry, and then they shared your information with me, and we hooked up last week, and I was like, let's get you on the podcast. So it's perfect. I'm glad for, that's a little shout out to PYP for bringing us together. So why don't you give us a little bit of a background of, who you are, kind of, your history, and then what got you into Northwestern Mutual, and then we'll go from there.
Yeah, man. Huge shout out to PYP. Ethan and Harry, I just can't say enough great things about them.
Yeah,
I know
they're pretty all right.
I know, don't want to boost up their egos, but they're great guys, super ambitious, and it's awesome that you have those people in your circle.
Yeah.
So, that's, like you said, networking is huge, and I'm really proud to be a part of that group and proud to be a part of this circle. So,
yeah, you are now. I feel like it's cool to have, just to have your circle grow when you meet people, and there's kind of that connection of, oh, you're like-minded. And, it's just it's a cool thing. It's something that doesn't happen all that often, to be honest. So,
it's very hard, few and far in between.
Yeah.
But yeah, I hate talking about myself. Usually all my conversations are about other people. But yeah, James Kraft, born and raised in Pensacola, went to Tate High School, nothing special, nothing out of the ordinary. Ended up starting my, schooling at the University of Tuscaloosa up in Alabama, or University of Alabama in Tuscaloosa. Always get that mixed up, Roll Tide and all that.
Yeah.
And then me and my now wife, Morgan, actually moved to Orlando. That's where I transferred to UCF and finished up my degree there in finance. The big push to move to Orlando was actually for my wife. She does hair. She's a cosmetologist, and she wanted that bigger city vibe and wanted to really, expand her knowledge in that realm. So bigger cities, bigger schools, bigger everything.
Yeah, 100%.
So, yeah, we spent a lot of time down in Orlando. I really enjoyed it. And actually, that's where I found my passion for the financial advising and the financial industry.
Okay.
So
Yeah. So I want to jump into that, kind of what got you into it, and then what brought you to Pensacola specifically.
Oh, what brings everyone to Pensacola? There's a million different things. Love the beach, love the small town vibe with the
That's what I was gonna.
big city feel.
Yeah, it's a nice balance.
I didn't. It's weird. A lot of people come to Pensacola because they love the beach or all these different things, but a lot of those people aren't familiar with Florida very much at all. I mean, I certainly wasn't when I came to Pensacola. That was my first exposure at all to any kind of, beach life at all. But it's interesting that you went from Orlando and came up here, and you're saying a lot of it was it maybe for opportunity, or was it kind of just to get away from Orlando, or in a different type
just
of
coming
feel?
home.
Just coming home.
Yeah.
Okay.
Yeah. Family's a big pool.
Yeah.
Especially in, again, a small city. It's family's huge.
Yeah.
It's great to be around my mom, sister, my wife's family. They're great, and that's really what brought us back.
Okay.
And it's a super cool environment. It's a super cool atmosphere and vibe. Again, You've got the country-ish hunting, fishing, all that stuff. You've got the beach people.
Yep.
You've got the city metropolitan vibe that seems to be emerging, day in and day out. More and more coffee shops are popping up, which is huge.
Yep, 100%.
That was a big thing in Orlando, but I think Florida's awesome.
Oh,
It's so diverse, so much bigger, so much just
more interesting,
cooler, more interesting than a lot of people give it credit for.
Yeah,
'Cause you've got everything. You've got Pensacola, you've got Jacksonville. That I like to think it's in the middle, just like Orlando is. Of the Miami vibe, but the still laid back, down to earth vibe.
And then you also have the Miami vibe.
And you got the Miami
that's
vibe,
like
yeah.
really, that's something completely different. I think I told you, but one of my close friends is moving to Miami the end of this month. And I felt like, man, that's going to be such a big change going from Pensacola to Miami.
Yeah.
Oh yeah, Pensacola straight to Miami.
Yeah,
That's
that's there's no in between there. That's both polar opposites. So Evan, if you're hearing this, I still don't want you to move. But anyway, so having said that, then so you came back here and you finished your degree. You finished your degree in finance, and then that's kind of from there you found your interest in financial advising. And I kind of already have heard this story, but go ahead and please, for the people listening, go ahead and just nutshell it for us.
Yeah. So in a nutshell, down in Orlando, I had the great opportunity to work for a small accounting firm. And I say small just because it had less than 15 employees. The amount of business they did was huge. I mean, they cranked out tax returns and had an awesome business plan and business structure. But the reason I say it was so beneficial to my learning and spurring that interest in the financial industry was because they actually had just started a wealth management division. And they had just brought in a few more advisors. And because of my background, or my soon-to-be background in finance at UCF, I would spend my lunch breaks, after hours, talking to the advisors, going over theories, topics, questions about the stock market, all that stuff that pretty much everyone has.
Yeah.
I had literally, direct access to that. And I got to see how they interacted with their clients, the year-long lifetime relationships that they built, and their lifestyle was pretty flexible as well. It really drew me to it.
Mm-hmm.
To go back even further, it wasn't one of those lifestyle movie realizations, like the light bulb.
Sure.
But when I was 16, actually I just turned 17, which is crazy, but my dad had passed away.
I'm sorry to hear that.
Yeah, I really appreciate it. But, time has passed. It's never going to be easy, but it's a huge driving factor in what I do today.
Mm-hmm.
Because, the picture was my dad was a main breadwinner. He was an entrepreneur. He owned his own engineering firm.
Wow.
Huge deal. Did really well for himself. Had a great childhood. My mom worked for him. So the flexibility was there. But then he got cancer. 6 months later, gone.
Mm-hmm.
Just put out. And he always thought, to a flaw, but, I hold nothing against him. He always thought that you could outwork other things, setbacks.
Mm-hmm.
Mm-hmm.
And it's really hard to.
Yeah.
Each person has the same amount of time in a day. So there's usually other fallback plans that need to be set in place
Yeah.
to hedge against those things. The
Unexpected.
unexpected.
Yep. 100%.
Yeah.
I think that's something that so many, especially driven people, I think a lot of times struggle with. And I make this comment all the time to Dan. It's like, it's easy, especially when you're young, to kind of feel invincible and not worry about what could happen. It's just, oh, okay, we know what's in front of us and we know what has to be done. And so definitely hedging against the unexpected. That's something that people should think about more, but probably don't,
Yeah.
It's extremely hard.
Yeah.
And on the other side of that, in our 20s, mid-20s, late 20s, whatever stage you're in, you do kind of feel invincible.
Yeah.
You can sleep later, you can work harder, you can work longer.
Mm-hmm.
There's always that mindset that you're in where it's like, if I'm not doing something productive, I'm doing something wrong.
Yeah.
And
Definitely.
and sometimes it's hard to find that balance of relaxed productivity is almost what I like to call it.
Yeah.
You're at your best when you're at your mental best, and
well
you're at your
rested is a
most-
big deal.
yeah,
Yeah.
exactly. So that's something else I've tried to bring into my practice is being, especially with a wife, no kids, but a couple of dogs,
Yeah,
That's
pretty much the same thing.
being a family man with a business and not a businessman with a family.
Yeah, that was
Well
interesting.
said.
We had Jeremy Harris on several episodes ago, and we asked him, tell us about yourself. And the first thing he started off with was, well, I'm a husband and father. And then he's a pastor. And I just thought, man, that's really cool that he started off with those, because you can tell where his priority is,
Exactly.
And it's something that you just don't even really think about. You tell people what you do for a living. Everybody does. But I just thought that was cool, so I'm not sure where I was going with that. Oh yeah, you're a family man with a business rather than businessman with a family. I like that. That's cool.
Yeah, it's super important to keep your priorities straight.
Mm-hmm.
Whatever that may look like for you, religion, family, business, whatever it is, make sure you know what they are
Mm-hmm.
and make sure
Yeah.
you keep them straight.
That's
Yeah.
100%.
the flaws can get.
Yeah, it's easy for things to just kind of fall by the wayside. The big things that everybody says is important to them, but every day, things tend to get racked up and you forget time for what's important.
Yeah,
So,
exactly.
Yeah, this is a time management episode right here. I feel like a lot of times we end up talking about time management because that's so prevalent and it's really on everybody's minds, especially people who are trying to perform at a high level. But having said that, then kind of jumping into where you are now. First of all, is it, are you enjoying the job, or is it what you hoped it would be? Kind of seeing some of those other people doing what you're doing now.
Oh yeah, so it's definitely not surprising, is what I
Sure.
need to say.
You knew what it would be.
Yeah, because if you talk to any advisor and you ask them how they started, unless in the rare case they were just given a practice and started off running, every single one of them says the first 5 years is the hardest. Just like any small business.
It's the same in real estate. Yeah.
Mm-hmm.
Yeah, exactly. The first year is extremely hard. I mean, the turnover rate, the amount of people that fail is immensely high.
Mm-hmm.
I want to say it's upwards of 90%.
Wow.
But the people that continue their business after 5 years is also 90%. So as long as you can stick it out and work and grind,
You're kind of in the clear.
you're in the clear.
Okay.
Yeah. So that 5-year mark is technically where people see the hump at. That's the goal. Make it to that point and figure out the rest.
Yeah.
Claw, grind, whatever you need to do.
Do what you got to do.
Yeah, crawl. Just get there,
Yeah.
and then you'll be set. And then the amount of people that you get to impact, the amount of lives you get to change increases exponentially each year.
Yeah, I'm sure it does. Now, how long have you been an advisor then?
Only a few months, actually.
Okay.
Yeah, since the beginning of this year.
Very cool.
Yeah.
Okay.
Fantastic.
So that's something that I love, is being able to, because I've been in real estate for about 2 years now, a little over 2 years, and I still feel like I'm brand new some days. And I love that mentality, or just the mindset that comes from being with other people who are new. You have something to prove, and you have to show up every day and work really hard. And it's good to be around people like that. So
Yeah, see,
it's exciting.
Oh, it's super exciting. It's great. Every day is new. It's always a challenge. But the thing I always say is don't test me, or don't trust me, test me. So there is something to prove, but no one has really worried about my experience.
Yeah.
Because I do know what I'm talking about. I am able to back it up. But again, don't just take my word for it. Test me.
Yeah, give you a shot.
Yeah.
That's what I would always tell people in the very beginning for me as well. And I was able to leverage my broker as well, and kind of, hey, he watches everything that I do, so I'm not going to make big mistakes. But, my lack of experience is a benefit to you, because I have more time to spend on your deal than other agents would, and I'll work harder for you anyway. So that's cool. So the reason that I kind of wanted to get you on the show right now is to talk about some of the different there's some new legislations, or at least proposals, that regarding taxes that you and I were talking about when we were out for coffee the other day. And I felt like it would be really interesting to be able to kind of just dissect those and give an overview of what those are on the show, so people can be, informed. And it's not all, like you said earlier, everything's a grain of salt. We have no idea exactly, but these are things that are on the table. So I don't know if you want to just jump into it, or what you want to do.
Yeah, definitely. What I can definitely say is there's a lot of changes on the horizon whenever you're looking at taxes. President Biden campaigned on these changes, increasing the tax on the wealthy, making sure that the super wealthy pay their fair share. What we're starting to see is that definition of wealthy is kind of blurred. Only because we're living, especially after the past year, we're living in a more volatile environment.
Yeah.
And the only reason I say that is because the amount of small businesses that were started in 2021 or 2020 to 2021 was insanely high. When people are forced out of their jobs for a reason, well, that survivor mentality kicks in.
Interesting.
And people started taking up real estate. They started their own little businesses. I've seen a lot of, I know a girl who started a dog tag company. People started doing the drop shipping, anything that they could to make ends meet. It's like people in general are super resilient.
Yeah.
They aren't just going to lay down and take it.
Yeah.
Well, I say that, now you see all these now hiring signs out, and that's a huge problem, but that's neither here nor there.
Sure.
We can talk about that a whole hour. But some of the tax proposals that are being talked about I think that are really prevalent, are getting rid of the 1031 exchange, or at least limiting it extremely.
Yeah.
Increasing the capital gains rate, which we'll get into some of these definitions, not entirely, because the one thing
they're in depth.
Yeah, they're super in depth. There's a lot of different factors in it, and also if you really want to put people to sleep, you start talking about taxes.
Yeah, for sure.
So we'll try and keep it light
Yeah.
and super high level. But I mean, just jumping into 1031 exchange, because obviously that affects realtors and real estate investors directly. For people that don't know, the 1031 exchange is the ability to sell a property for a gain or more than you originally purchased it for, and then use those profits to then invest in another property and defer the taxes on those gains. Real estate investors take advantage of this almost every day.
Yeah, and it's really powerful too, because when you sell it at a gain, you'd have to pay taxes typically. So what they do is you sell it and you find what they call a like-kind property, or something that's not, drastically different and more expensive presumably, and you roll it into another transaction. So you're basically trading up without having to pay taxes yet. Like you said, deferral, it just means paying it down the road.
Or potentially never paying it.
Exactly.
So that's another thing that's potentially being changed, is what people have done in the past is use this tax loophole to continually roll those profits into bigger and bigger properties, and they amass a huge estate, and then they pass those assets onto their heirs. And what happens is that there's a step up in cost basis, which what that's saying, I know I'm throwing all these tax terms out there, but what's that saying is, instead of you inheriting your parents' property at the cost basis that they paid for it, which let's just say it's $100,000, and they're all of a sudden giving you a $1 million real estate portfolio, you would technically just inherit that at the cost basis of $1 million. If you went to sell it, you pay 0 taxes.
Mm-hmm.
Whoa.
Yeah, again, there's a lot of different factors.
Sure.
But
that's pretty powerful right there, too.
yeah, I mean, it's huge. And that's what a lot of real estate investors have done. Whenever they pass away, they transfer those assets to their heirs. Their heirs maybe don't want to be a real estate mogul. They sell it. They take the cash.
Which who wouldn't want to be? Come on now. I can't imagine that.
You know, but I mean, that's huge, right? I mean, you could potentially pass on millions of dollars of assets tax-free.
Mm-hmm.
But that's also a huge tax target. And that's, you know, that's where people are starting to realize, man, I want to say there's a stat that loophole, I want to say the 1031 loophole has saved taxpayers an average of $41 billion per year the past 5 years.
That's billion with a B.
Yeah, and don't quote me on that.
Yeah,
but I mean, it's a massive number. I'm not
sure
talking
it
about
is.
hundreds of thousands.
Mm-hmm.
I mean, and we're talking, you know, just deals upon deals. And the issue with this is that everyone that's backing this stuff is saying that it's only going to affect the super wealthy. Well, you and I both might know people with real estate portfolios upwards of 10, let's just say multi-million-dollar real estate portfolios who are looking to transfer those assets onto their heirs. Well, we're just talking about everyday people here. People who have worked their whole lives for this stuff.
More than $1 million in real estate is really not that much real estate.
Yeah, and don't get me wrong, the people who have amassed that much, over $1 million in real estate, I mean, that's huge.
It's awesome. Yeah.
That's you worked super hard for that.
But it's not
taken a lot of hard
uncommon.
work.
It's very common in the world of real estate investors.
But it's more common than people think.
Yeah.
Mm-hmm.
And potentially those kids or the heirs to these properties, to these portfolios, they might just be your average Joe. They might be the teacher at the local middle school. They might be, the local CPA, just a regular accountant, just regular blue-collar, white-collar people who are not making millions of dollars a year.
Mm-hmm.
You know, we're just talking about average people. Whenever they get these assets, if these 1031 exchanges or the step-up in cost basis goes away, or potentially other proposals get enacted, well, these average people are potentially either having to look at liquidating those estates or fronting a bill for who knows how much, potentially 40% of those assets just to keep them.
Mm-hmm.
Because they're going to have to realize those gains.
Yeah.
Right? So that's where a lot of questions have been coming up in client meetings and such, is how to prepare, for these tax changes that are being talked about. Because people are worried.
Yeah.
And what we can tell them is, obviously, first off, it's just a proposal. We don't really know what's going to be enacted.
For sure. Yeah.
How often are these tax proposals, 100% passed?
Yeah.
So we're expecting differences, changes, limitations. But we are expecting a little bit of market volatility, potentially, if some of these changes were enacted. Because if you're telling someone that, like one of the proposals that I didn't mention was the long-term capital gains rates on super wealthy individuals right now is maxed out at 20%. All right, so if you hold an asset for longer than a year, and you go to sell that asset, if you're in a certain tax threshold or income tax bracket, you're only going to pay 20% on those gains, which is huge. I mean, 20% is not that much.
Yeah.
Right?
Yeah.
They're talking about increasing that to 39%, or the highest marginal tax bracket.
Almost
so double. Yeah.
Yeah.
Almost. So that's huge. And what people are saying is that if that were to be enacted, whether it's retroactive, like push back to January 1st of 2021, or if we're looking at this next year in 2022, that could cause a market sell-off. I mean, the term there is could. We want to emphasize, we don't know. We don't have a crystal ball.
Yeah. Potentially. Yeah.
But you have different indicators.
But if you're telling someone that they have over $1 million in appreciation and they can save 20% by selling it now,
I mean,
I mean, 20% is not a lot, but an extra 20%,
Yeah.
I'm taking that.
20
to add
versus
up
40.
quick.
I mean, yeah,
I'm taking that
is
profit all day.
huge,
Yeah.
huge.
Yeah. So, and again, what I do want to mention is everyone thinks that this is so far out there. The people only making over $1 million.
Mm-hmm.
But what have we seen in the past, let's say 5-10 years, are a lot of new money that's come about due to the crypto surges. I want to say I read a stat today, not want to say, I read a stat today, that the $1,200 stimulus check invested into Dogecoin is worth upwards of $400,000.
Yeah, that's a whole nother thing, man.
Yeah.
That's a whole nother thing.
The meme crypto.
Again, we're not trying to get into that.
Yeah.
I can't advise on it. Whatever. But
it's a fact.
But it's a taxable asset.
Mm.
Yeah.
All right.
Yeah.
So these people who, again, amassed a serious amount of wealth in a short amount of time, maybe aren't expecting this tax bill because they're hearing, oh, it's only going to affect the super wealthy. I'm not super wealthy, but I've got $500,000 in crypto. I mean, that's nothing to joke about.
Yeah,
you
man.
know.
Yeah. That's way more than the average Joe.
Yeah,
for sure.
Exactly. So I think more people are going to be affected by some of these changes than potentially the media has let on about. But again, I don't know.
Yeah.
You know, that's just a thought.
For sure. Yeah. I completely understand that. Now the proposals that we're talking about, I have no idea. I'm very ignorant on this kind of stuff, but when are decisions going to be made on some of this stuff?
That's really hard to say.
Okay.
Yeah,
So,
it's just speculation.
It's all speculation. There's a lot of talks about it.
Sure.
There's a lot of steps that still have to be taken for these items to be enacted. But the reason I even brought up that they could be looking at a retroactive effective date is because that's been talked about. So some of those people...
That's a big deal, too.
That's huge. I mean, they have the ability to say, yeah, we're going to enact these taxes, these huge changes. We're also going to make it effective January 1, 2021. So now there's no planning for it.
If you did it without realizing, sorry.
Yeah, exactly.
Yeah.
Yeah.
I mean,
I don't know how I feel about that.
It's,
I know how I feel about that. Actually, I know exactly how I feel.
it's huge, you know. The important part about all this, or the stuff that I want to stress, is that if you're not working with basically a team of professionals and you're trying to amass, actually not if you're trying to amass wealth, if you're just an average person, I mean, you need to have a CPA in your back pocket. You need to be working with a financial professional like myself or Fenoy Butler or whoever else you like. You know, just find someone that you can really click with and start talking to them. Start asking them these questions. Because if you're not talking to someone about this whose job it is to stay updated on these things, well, you're kind of behind. You know, work with realtors. That's why me and my one of my colleagues, Alex Coyne, worked so hard on this presentation. You know, we wanted to bring realtors up to date on these potential changes and how it can affect your clients.
Yeah. And it does massively.
Yeah, that's huge. So staying up to date, again, how much can we really do to change it? Not much. You know, these things are going to happen. What they say is taxes are either going to change or go up now, or they're going to go up or change 4 years from now, or 4 years after that, or 4 years after that.
Yeah,
you know, every election is going to bring some type of change.
Yeah.
But positioning yourself around a group of professionals who are there, you know, to share your best interests at heart is huge.
Yeah.
That's the best way to prepare
Just having
for
people in your corner.
Yeah.
And like you said, people who are trained and paid to just know about this kind of stuff.
Yeah.
You know?
Exactly.
And that was the thing is, if I hadn't even talked to you last week, I wouldn't know any of this stuff because I spend my time looking at Pensacola real estate. That's what I do, you know. So I don't really concern myself with a lot of that stuff often.
Yeah,
so.
and that's your field of view. You know, that's what you're supposed to do. That's what you're supposed to be focused on. Just like my wife, she does hair. That's her job.
Yeah,
her clients don't cut their own hair.
Yeah, exactly.
That's her expertise. So again, it's really hard, especially when you're talking to ambitious entrepreneurs or just young ambitious people. They're big DIYers. They're going to do everything themselves.
Yeah.
and we've talked about this, is that there's an efficiency flaw there. You really can't.
Yep, 100%.
You need to focus on what you're good at and what you can provide the most value to your community, your people, your employer, whoever it is. You need to focus your energy on that, and then let the other people who are paid or, have this interest or this job at heart to do what they're good at.
Yeah.
You need to start leveraging other people.
So what I was going to say on that is it's hard whenever you're first starting out in business because you probably don't have money for just about anything, maybe some ramen noodles,
Sure.
A lot of entrepreneurs are that way. And so it's hard to go find those professionals to help you grow, and because you have to do everything yourself in the very beginning. So I know something for me that's been very difficult is making that transition from doing everything myself and just asking, people that I trust for advice to actually, okay, I'm just paying this person to take it off my plate completely. And it's definitely way more efficient. It's worth the money because it gets done better in less time and with less stress, but it's just a hard transition to make. So, but I completely agree with you that, there's people whose job it is to do certain things and let them do it and trust them to do it.
Yeah.
So
The other thing I want to touch on there is I know it's the same as your profession in the financial realm. A lot of the work that we do is uncompensated. I believe the same is with a realtor.
it is not until closing. Yeah.
Mm-hmm.
Yeah, until closing, you get that check a little while later. You're showing multiple houses. You don't get paid for that.
Yeah.
You're potentially just meeting with clients, networking, providing market insights. A lot of that is uncompensated.
Mm-hmm. The vast majority
The vast majority.
Mm-hmm.
And that's the thing. And that's where I just want to touch on is one of the most common questions I get is, what is this going to cost?
How much do you cost? Yeah.
Yeah. Well, the advice a lot of times is free.
Mm-hmm.
The conversation is free. At least with our process. There's some advisors who charge for advice and stuff, but usually those are the more tenured advisors. And, that's where whenever I tell people, the first conversation, the plan, a lot of this stuff is uncompensated. That's where people's light bulb goes off.
Yeah.
They're like, oh, why didn't I do this earlier?
Yeah.
Why didn't I talk with someone
To be honest,
earlier?
I didn't know that. That was going to be a question I asked you off air because I wasn't sure if it was sensitive or anything, but I had no idea about that. Interesting. So how do you get paid then? How do you take home a check?
Yeah. So there's essentially a few different ways advisors get paid. The first one is a commission check. So what our process looks like is usually you sit down with a Northwestern Mutual rep or advisor, and you go through the conversational piece, the financial planning piece, and we show you a financial plan and make some recommendations. Some of those recommendations we get compensated on. And if you want to know, we'll tell you which ones those are.
Yeah.
If you choose to implement one of those products, then we get a kickback off of it. The other way is investment management. And usually it's like a percentage of assets under management that just gets pulled out of the account, goes to the brokerage, pays the advisor.
Okay.
So again, you're never really writing a check to an advisor unless you go to a specific financial planner who you're paying for a financial plan.
Interesting.
Yeah.
Okay.
And again, that should be one of the first questions you ask
Yeah.
is what am I going to pay for?
Yeah.
And sometimes people don't even ask. And I tell them.
Yeah, that's
I'm like,
good to
'cause
be upfront with that.
it's probably on the back of your mind anyways. People are always worried about how much something's going to cost.
Yeah.
And if you're not asking, either maybe you just have enough money where it doesn't matter,
Yeah, sometimes I'm sure that's true.
or you're just scared to ask. You think it's going to make you seem like a fool.
Yeah.
And it isn't.
Or
you know?
cheap.
Or cheap, yeah. And it really isn't. If you're not asking those questions, first off, maybe you're not really aware of your finances,
Yeah.
which is a big part of what
Probably
we do.
a lot of people.
Yeah. Or you're just worried about the way it makes you feel. And if that's the case, well, then maybe you need to work with another advisor who makes you feel a little more comfortable,
Yeah.
or another professional that does.
You make me feel pretty comfortable, just so you know. I definitely feel like, and I think a lot of it is age too. You're really a relatable person, and I enjoyed our coffee, and I'm enjoying this right now. This is really You know, and I think
productive. Yeah.
Yeah, Dan's looking for a new hairdresser too, so I'll probably send him to your wife.
Yeah, for sure.
So, well, that's cool. You mentioned at the beginning just kind of the growth in Pensacola and things like that, and new coffee shops. What's your favorite coffee shop here? Where do you go the most?
Man, to tell you the truth, I go to, of course, Fosco and Bodacious a lot.
Oh,
and really
yeah.
that's just because of proximity. And they have good coffee. Don't get me wrong.
Yeah, they do.
Mhm.
I do want to make a shout out today, though. This morning, I actually stopped at this guy's truck called Pickup Coffee Co. Have you heard of him?
No, I haven't.
His name's Dale.
Dale, cool.
Don't get I forget the last name, but his company is called Pickup Coffee Co. He literally he was a theater actor. I don't want to butcher his story. Look him up on Instagram, but essentially he built out a coffee shop, an espresso shop in the back of his Dodge pickup truck. And it's super professional looking.
That's cool.
Super good coffee. He's posted up his schedule on Instagram, and he's just hopping around different spots in Pensacola. He's a really nice guy, really down to earth, really good coffee.
Man, that's awesome.
Awesome.
Let's
Yeah.
look that up, Dan. That's
Cool
cool.
plug. Yeah.
Yeah, definitely
Pick up
check him
Coffee
out.
Co.
For sure.
We'll have to get him on the podcast at some point.
I
Yeah.
think you should. He's a really good guy.
Sounds
Man, that's cool.
ingenuitive.
That's awesome. All right. Well, one of the last things that I try and ask everybody, if I remember, is where can people reach you? Where can people connect with you? Do you prefer like LinkedIn or Facebook or?
Oh man, I'm on everything. So
Okay.
whatever your social media preference is,
Reach
I'm
out.
on it.
Cool.
Yeah, except for TikTok. Don't get me wrong. Maybe I'm just surprisingly
Behind the
enough getting
game.
old behind the game.
Man, I was feeling the same way, man. I used to judge TikTok so much. It's one of those things that it's difficult. I have a realtor friend of mine who has, I think he's getting close to 20,000. You know John Cho.
Oh,
I think
yeah.
he's got like 20,000 followers on TikTok.
Wow.
Yeah, which is crazy. But to be honest, if you go to his Instagram, not a lot of those have moved over.
Really?
Yeah, it's hard to monetize
it's hard to
it.
hard to monetize it, and also you have to look at the age of most of the people on there anyway. So I don't know. It's a good platform. I have a couple of videos on there that did really well, just about Pensacola lifestyle. But yeah, no. I'm agreeing with you about TikTok. We actually talked about it a couple weeks ago, and I was like, hey, I don't want to spend any time on this because there's no direct benefits for us. So
Yeah.
Yeah, it's there's so many different platforms out there. There's so many
Yes.
different media sources and all. It's really hard to you run in that process of diversifying too much.
Mm-hmm.
You know, where it's like, again, just like I said earlier, focus your efforts on what you're good at,
Yeah. Well said.
and go from there. So yeah, Instagram, LinkedIn, Facebook, the internet. I got a
Awesome.
website up, so
love
definitely
it.
check
Love
it
it.
out.
All right, love it, man. Well, I appreciate you jumping on, James. It's been fun and informative also. So, like I said while we were off air, I always tell people, hey, let's shoot for, a certain time frame. And I felt like for this one, 15, 25 minutes probably. And here we are. So, I mean,
Yeah.
it really, I have enjoyed talking with you, and super exciting to see you fresh and new in the business and working hard. And really, it just seems like you're killing it.
Yeah, we
So,
appreciate your time today.
Yeah,
It's definitely
we really
very
do. And
beneficial.
We'll check up on you as you see success in the future. Have you back on at some point, I'm sure.
That's right.
Yeah, of course. Thanks a lot, guys.
Cool. Thanks, man. All right. So that was our episode with James Kraft. I hope you guys enjoyed it. As always, I feel like we do a good job of picking guests on the show, because every time we turn off the microphones, or at least people that we like to talk to, because every time we turn off the microphones, we end up talking for several more minutes.
Apparently.
Yeah. So James is somebody, he's involved at PYP, Pensacola Young Professionals, and looking at getting involved in that with him. So I'm excited for that and to develop a little more of a connection with him. But hope that the tax stuff wasn't too boring for everybody. Hope that we gave some good information. What were you going to say, Dan?
I was just going to say, yeah, connect with him. We're going to put his links to his socials and his website in the description, so reach out to him. Obviously, you've heard in the episode what he has to offer, and it's a connection that you need to have here in Pensacola.
Yep, he's a young up-and-comer, so we enjoy having people like that on the show. As always, go listen to another episode, find something that interests you. If you're still here, what are you doing? Go watch another show.
Yeah, and
Thanks so
thank you
much.
for listening to this episode.
Yeah, thank you very much. Peace out.